Now everyone's talking about Grand Theft Auto 6, and for good reason. It could be the biggest selling game of all time. But here's the question that smart investors are asking. Is now a great time to buy Take-Two Interactive stock before the game release next year? In this video, we're going to find out. Hi, I'm Asher, and welcome back to the channel where we look at personal finance tips, investing tips, and how you can make smarter money moves. If you're new here, don't forget to hit that like button and subscribe. Let's get up to speed on Take-Two Interactive for anyone who's unfamiliar. The company was started by Ryan Brandt at just 21 years old. Ryan raised around 1.5 million from family and private investors. Their first hits were PC games with live actors. One game of note was Hell, a cyberpunk thriller, which helped them establish a foothold in the mid-1990s. This game sold 300,000 copies in the first 6 months, which back in 1994 was absolutely huge. Take-Two then had many other successful releases which helped them fund early success before their IPO in 1997. In 1998, Take-Two snapped up BMG Interactive, bringing Rockstar Games and the Grand Theft Auto series into its portfolio, arguably the defining move for the company. Since then, it's grown under labels such as Rockstar, 2K, Private Division, and even their fairly recent acquisition of mobile game giant Zynga. Today, it publishes some of the most successful franchises, including Grand Theft Auto, Red Dead Redemption, NBA 2K, Borderlands, Civilization, BioShock, Mafia, and many more. They're a global gaming powerhouse with rich history of acquisitions, innovation, and some of the most profitable franchises ever. So ultimately, they're a big player within the gaming industry. With that brief history covered, it's time to look at the main catalyst as to why this stock should be on your radar. That's of course the long-awaited release of Grand Theft Auto 6. GTA 6 is scheduled for release on May the 26th next year. It's poised to be a significant driver for the company's growth, and analysts project that the game could generate over $3 billion in its first year. This game release is not only projected to be a massive boost in initial revenue, but also long-term profitability through Grand Theft Auto Online. Before this launch, hype is building up around its release, and it's already broken records with viewers flocking to the game's trailers. Looking at the history of this franchise, its predecessor GTA V broke records upon release as well. According to the numbers, Grand Theft Auto 5 is the third best-selling video game of all time. Sales of this game passed 200 million units by the end of July last year. That number compiles the game's sales total across 3 console generations and PC. GTA 5 broke the record for the fastest entertainment release from any medium to reach $1 billion in retail sales, which it did in just 3 days. It's since earned Rockstar and Take-Two Interactive billions more, making it the most profitable piece of entertainment ever released. With this new release, analysts predict that GTA 6 will break more records, with predictions of reaching $1 billion in sales from pre-orders alone. This isn't going to be a one-hit wonder either. This game is expected to push boundaries with better monetization, a longer shelf life, next-gen graphics, and a broader digital economy. Now, one thing to note is that Rockstar typically like to stagger out the release for all the different platforms, and they do this for one good reason. They generally follow this same model where they release on consoles first, and then at a later date release on PC. This allows them to essentially win twice. First, they'll maximise the hype of the initial game release. Then 6 to 12 months later, the PC version will be released. And this will be like a second launch event which will include new mods, better graphics, and different levels for players to enjoy. So that means 2 waves of initial revenue for Take-Two Interactive, and we've seen them do it successfully before with the previous Grand Theft Auto releases and also Red Dead Redemption. Aside from this highly anticipated game, Take-Two also have some pretty big titles dropping soon, with Borderlands 4 on its way and the 2026 iterations of the NBA 2K franchise and the WWE 2K franchise, as well as some re-release games such as Civilization for the new Nintendo Switch 2. So with all this buzz and hype, it doesn't just make headlines, it starts to move numbers. Now it's time to look at some of the financials and the potential upside investors could have. In recent years, the revenue figures have been quite promising, with some anomalies anomalies in there, so let's go through these past few years. 2021 saw strong performance from its NBA 2K and GTA 5 games. 2022 followed a similar path with strong sales from its overall catalogue of games and the additional downloadable online content. 2023, however, saw a huge spike in revenue, and this was the year that Take-Two Interactive acquired the mobile game giant Zynga, which, like a light switch overnight, Take-Two will then recognise that instant revenue from this acquired business. 2024 was a flat year with few big game title releases, and 2025 is estimated to be back on for steady growth, with some larger games dropping later this year. So let's look a little bit closer at the net income and some of the profits. In 2021, the company made $589 million in profit, a strong year driven by massive engagement with GTA 5, NBA 2K, and pandemic gaming tailwinds. In 2022, they still posted a heavy $418 million profit, and if you remember, this was also the year they announced their acquisition of gaming giant Zynga. But in 2023, we saw a bit of a shift. There was a $1.12 billion net loss. This was the first year that Zynga was fully integrated, and Take-Two started reassessing the value of that acquisition. In 2024, that loss deepened to $3.74 billion, and then again to $4.48 billion in 2025. So what happened here? Did the company stop making money? Well, not quite. You see, these losses weren't because people stopped buying games or that the business model broke down. Instead, it was because of something called a Goodwill impairment. So let's break down exactly what that is. When a company buys another company, like Take-Two buying Zynga, they usually pay a premium over the fair market value. That premium's called Goodwill. But if a year or two later, that acquired business isn't performing as expected, or the market conditions change, the parent company has to write down that goodwill, and that write-down shows up as a loss on the income statement. Think of it like this. Say if you went out and bought a car for £20,000, and then after a little bit of time you realised, actually, I think it's only worth £12,000. Now you haven't lost £8,000 that day, but on paper you have taken an £8,000 hit. That's what a goodwill impairment is. It's an accounting adjustment. It's not a sign that money's just pouring out the door. So when we see that $3.5 billion goodwill impairment in 2025, that's not money that Take-Two actually spent this year. It's just them admitting, hey, the mobile division isn't what we thought when we bought it. Importantly, this doesn't mean the core business is in trouble. So while headlines might scream about these losses, smart investors should know that these are not fundamental losses. So now that we've covered a couple of those figures, it's time to look at some of the R&D. Here's what Take-Two's investment in its future looks like. In 2023, they spent $888 million on research and development. And in 2024, this went up to $948 million. And in 2025, that has jumped up to over $1 billion. A 6% year-on-year increase, and that to me is huge. It shows that Take-Two are investing heavily in their new game releases and they're not cutting any corners. GTA 6 has been in development for over a decade now, and that just shows the commitment and long-term approach that Take-Two Interactive are taking with this title. Next, let's take a look at something called the Non GAAP EPS. Simply put, it's a way of going, let's remove all that accounting noise and really look at how profitable this company is. For Take-Two, the number looked like this. As you can see, it's dipped in recent years, and that's totally normal because they're investing heavily in the next big thing. So for me, this isn't actually as bleak as it reads. I see this as an opportunity. Even if GTA 6 performs like analysts expect, even modestly, we could see 25 to 30 million copies sold in the first year. Some analysts estimate that in the year after GTA 6 launches, Take-Two's non-GAAP earnings per share could climb to $8, $9, or even over $10. So that's nearly 4 times higher than it is today. So imagine buying a stock today while it's earning $2.50 per share. In 2 years' time, it could be earning $10 per share. That's the kind of earnings growth that can send a stock rocketing. Okay, so some of the upside potential is exciting, but as always, it's important to stay grounded and consider all factors before hitting buy. First of all, there's a slight timing risk, the wait for Grand Theft Auto 6. And with their staggered approach, it's going to be even later for PC players. That means that most of this explosive revenue growth that we talked about, it won't show up for at least another 12 to 18 months. So if you're looking for really fast gains, then this stock might not be the right one for you. Second of all, there's an execution risk. What if it disappoints? Now let's be real here, the expectations for this game are absolutely huge. Now if Rockstar underdelivers with this game, and that could be through a disappointing storyline or disappointing fans' expectations, this could create a major backlash. And we have seen this before, so anyone who remembers the GTA Trilogy remaster, fans were not happy. And that moment hurt Take-Two's image and short-term stock price. The third risk is the high development costs. Now GTA 6 is reported to be one of the most expensive games ever made. If revenue doesn't scale the way analysts expect, Take-Two could be looking at much weaker margins than anticipated. If you take these points and feed them into the current financial health of the company, there's no denying that they are currently running at a loss. So for everything that we've looked at there, through the company's history, the upcoming game releases, the financials, what's my verdict? First of all, let me say this is not financial advice. These are purely my views from the research that I've done. But I'd personally give this stock a buy rating. But this isn't a stock I'm expecting to pop overnight. This is a longer term play, and I'd expect to see the results late 2026 or early 2027. Right now, Take-Two is trading at the $230 range, but if GTA 6 delivers anywhere near its expectations and Take-Two continues to expand GTA Online, I personally think we'll see this stock cross the $300 per share mark by the end of 2026. It'll take patience, strong execution, but if you add in a couple of the other titles that Take-Two are releasing, I think this is more than possible. So my personal approach to adding this to my portfolio is that I'll be averaging in on this stock, but not in a big way. It will not become one of the largest holdings in my portfolio, but I'll add into it every couple of months or whenever I see the price dip slightly. My plan is to do this throughout 2025 and then see where the price is at the back end of the year and then ahead of the release, and potentially hold off, but I'll keep you guys in the loop with that. It's a stock I plan to hold way into the future and way past the initial launch, and I'm hoping we'll see some additional revenue come from that ongoing GTA Online element. So that wraps up my view on Take-Two Interactive. I personally think it's a buy, but this is also one of the first times I've done a video like this, so if it's something you've enjoyed or you think I've missed anything, then please do let me know in the comments. If you've enjoyed this format, then please let me know in the comments section. Equally, if you've got a company that you'd like me to have a look at, let me know in the comments, as I'm always looking for more interesting stocks. Finally, if you're new here, please consider subscribing because it really helps the channel in these early stages. Thanks for watching, and I'll see you in the next one.